So thank you to join the conversation about financing. We have a very kind of a balanced panel from different financing sources. Pri represents the multilateral lending agencies, and Sharini from private equity, being a boutique investment banking house and advisory firm, and Shahan from Citibank as well as HSBC, long years of experience, including Jonathan, who is also having international bank experience. So we have the whole gamut of funding sources, and we can have a very fruitful discussion now. Priyanka, if you can let me question you on why is yet most of these hotel companies are not tapping into low-cost foreign currency funding sources that Jonathan explained.
So traditionally, it was difficult to get long-term financing in foreign currency. Actually, even in Sri Lanka, even in local currency, until a few years ago, it was difficult to get the long tenor that, and Jonathan will correct me if I'm wrong, it was difficult to get the long tenor that hotels need. But now, as Jonathan explained, you can get that in local currency, but what we find is in foreign currency, still it's not that easy to get the kind of long tenor. So now, while the interest rates were fairly low in local currency terms, it was fine to just borrow in rupees. But now with the interest rates increasing, what the hotel sector really needs to turn to the foreign currencies, because they are able to hedge the foreign currency loans. And so I think that's what where they will turn to going forward. Also typically, and Jonathan mentioned that some banks, investors bring funding from their banks overseas. So that is more a recent phenomenon. Now a lot of foreign banks are, even if they're not present in the country, maybe more willing to consider Sri Lanka, and that wasn't available before. And of course, we have the multilateral organizations like the IFC, where we do provide long-term financing. And now with the local currency interest rates going up, we do see a demand for the dollars.
There is a perception that multilateral funding agencies has a preference for large hotel projects and not so much SMEs or fairly small scale projects as well as other activities. Do you agree to that, or have a different view?
So the perception could really be drawn from the fact that it's not really the type of hotel, but it's the investment size. So multilateral institutions like the IFC and other such agencies, we're not really meant to do retail banking. That's what commercial banks, that's what they do. So we are geared to do a few larger transactions. Initially, we were geared to just do project finance. So actually, it just comes down to size. We take a little bit longer to evaluate the project because we look at it from a project finance perspective. We need to be sure that the project itself is financially sustainable, and not just because the promoter has a good balance sheet. If the project is financially sustainable, it's not something that we would want to do. So because we have to, and then our approval process is also a little bit longer than a typical commercial bank. So for these reasons, it makes sense if we fund sort of a sizable amount. So one mid-sized hotel, or maybe the SMEs definitely will not fall into that category. But for example, if there's a portfolio of mid-size or small hotels, that could very well warrant the kind of funding that we could bring.
Do you see any other indicators that multilateral agencies look at compared to commercial banks or development banks?
So in effect, we do look for the triple bottom line. So we look for the financial sustainability, but along with that, we also look for environmental and social sustainability. And this, from the IFC perspective, we have what we call IFC's performance standards. So this covers a gamut of environmental and social topics or areas such as labor, land acquisition, resettlement, pollution. So what we want to ensure is that our investments will be socially and environmentally sustainable according to international benchmarks. And these environmental and social standards are fast becoming part of international financing as well as international laws. So when IFC or other multilaterals come into emerging markets, what we see is that there could be a gap between international norms or standards and what the private sector in the emerging markets are doing. So along with our mandate to promote sustainable development, we try to promote our investment companies to reach that higher benchmark.
From a borrower's perspective, do you add more value than commercial banks or something make it different?
Good question. A lot of clients come to us and say, why should we come to you when we can go to our local bank? And actually, if you can go to your local bank, you shouldn't be coming to us, because it is not our role to be competing with the local banks or your commercial banks. In fact, we finance banks. About 60% of our portfolio globally is into financial institutions so that they can in turn fund the private sector. But where we do play a role is we try to come in where there are gaps. So if for some reason you're unable to get the funding, maybe you can't get the tenor, maybe it's in a region where your bank is not comfortable to go, maybe it's an industry that the banks are not comfortable to finance, maybe some new technology, maybe some renewable energy, something which is new. Most likely we or other multilaterals would be comfortable to take that risk, or we can provide the tenor. So there are the different types of value which we bring in, and usually it's to fill in the gap or where there's a gap in the market.
Thank you, Pri. I will move on to Sharini now with her background in investment banking and advisory, more into other creative sources of funding, because there is so much other sources that hotel companies can use. So if you'd like to elaborate on what you offer and what in general private equity and equity providers and other advisory firms can offer to the prospective hotel operators who want to come to Sri Lanka?
That's a good, interesting question. I think when we speak about capital, it's very important to kind of segregate the kinds of capital we're talking about. So we've heard a lot today so far, at least about the fixed income side, so I will speak a little bit more about the equity side. So when you look at equity in Sri Lanka and what are the opportunities, one type of equity is private equity funding. So we have seen interest by private equity funds in the leisure sector in Sri Lanka. When you think about private equity, the main things they're looking for is one, return. We heard that, I think one of the other panels also said private equity will generally look for the highest of all capital types. That's one of the highest return requirements. They're looking for exit as well. And for the international private equity funds, especially scale. So most private equity funds want to invest minimum ticket sizes, and Priyanka, you also said it's a problem or a constraint for larger institutional investors as well. Now, if you consider those three aspects in Sri Lanka, from the return perspective, I think we have seen very good projects, very interesting projects where you are likely to generate the kind of returns that private equity is looking for. The real question has been on the exit. A private equity fund will often come in the initial part of the development, but then in hotels, like how will they exit their investment? And the challenge around exits, I think, has been twofold. Thus far, at least, we've seen the large developments being primarily done by the large hotel groups here who are not really looking to exit. So in that case, they're not very aligned with the private equity firm. But we've been around for 5 years in Sri Lanka, And I've seen that really change because we are seeing more promoters who are coming into the sector who are interested in building a hotel or let's say a chain of hotels with the view of ultimately exiting in a few years. So that makes those types of opportunities more conducive to private equity funding. That's one, and then those kinds of opportunities too often address the main constraint around scale for private equity funding. So I think those are sort of the challenges that private equity has faced thus far, but I wanted to say that we're seeing the market change and move towards being more hospitable to private equity funding.
Well, one of the things you mentioned is challenge of exits.
Yes.
Do you see now, considering the state of affairs of the capital market in Sri Lanka is, and hopefully it will be better in time to come, but in terms of current status, do you see other ways of exit in the industry which you can look at where, not going for an IPO or listing, but alternative ways of exiting where private equity funds can be, made available for hotel projects?
So there are different kinds of investors. When you look at like real estate, and like I consider hotels like part of the spectrum of real estate opportunities. And certainly there are investors who are interested in the yield play. So when private equity funds looking for that 20-25% return, but then you have, and in one of the panels earlier this morning, we heard from a couple of investors who are looking at the yields, who are looking at generating steady cash flow based income. And those type of investors could be a good source of exit for private equity funds, and just the fact that you've seen a lot of them on the stage today, and I think in the room, and also we've heard from a number as investment banks, I think that is a interesting capital source.
So to get variety, I will move into Shahan. Now, you have a lot of experience in the international banking side. What is the difference in appetite when it comes to international banks if you compare Sri Lanka, Maldives and the region? Why Sri Lanka is not so favorable by the international banks?
Okay, firstly, the international banks and the operation of the local banks are totally different. And what happens is in a local bank, you would have a lot of authority in country, whereas international bank, the strategy, the risk management, and even the operations, it's derived by your regional office or your global office. And also when you define your industry, the tourism industry, the local bank gets to define the industry and evaluate. Whereas when it comes to an international bank, the industry is already defined and your parameters are defined, and even the evaluation is done by a subject matter expert who would not have hands-on experience on what's happening on the ground. So given all these constraints, if there is any issue anywhere in the globe on the particular industry, that will also adversely affect the local analysis on the industry. So given that, there is a little bit of, also these big banks are very conservative, very especially in smaller markets. So they have burned their hands in the big markets, so they are very careful on the small markets.
Is country risk coming into play? Because I see foreign banks very happy to lend to Maldives, but not to Sri Lanka, something like that. First they look at the country risk and the country exposure levels, and then identify only very select few to lend.
That's right. Country risk also comes into play, and Sri Lanka has not been favorable for a very long time. Then we were favorable. Then again, we have had a small dip in our country risk rating, and also currency risk. Everything comes into play, cross-border. So it's a little bit more complex when it comes to multinational banks.
If foreign banks are to lend, what we will see as the attractive or conditions that they will be comfortable to the hotel sector?
Actually, if you look at the region, technically, if you look at it on a strict evaluation, Sri Lanka, given our current condition, should be the most favorable market, given our legal aspect of it and our regulators and the borrowers in the market. But then, and Maldives would rank second. But then if you look at these banks on strategy, they prefer to have more exposure in India. It's solely not because conditions are favorable, it's because the strategy to be in a large market is driving it.
Do you see foreign banks being able to help in local hotel operators to hedge some of the exchange risk and arrange foreign funding through their other sources, not directly from the bank, but helping in terms of corporate finance facilities or arranging funding?
Definitely, because I've seen it in the apparel sector. You have them doing their distributor finance and their receivable financing offshore, and that has been facilitated by the foreign banks. And also in the risk management aspect of it, hedging their risk. But what I have identified is, though the banks are geared to deliver these fancy derivative products, the organizations, the borrowers, are a little bit, they lack the knowledge, or they're still getting used to having a risk management function in the hospitality industry. Whereas for a bank, having a risk management function or a financial institute, it is norm. But in the hotel trade, if you ask whether you have a risk manager, they say, we have a marketing manager and not a risk manager. So that is where they need to come, because financing is also important. So you need to move ahead with the changing markets. You need to come into this. We have burnt our hands in these fancy products, but you have to learn. Every time you burn your fingers, you learn how to come out of it, better structure it, and make use of the market volatility.
Excellent. I think I'll move back to Jonathan. Another area I think is there is a requirement is some of the infrastructure needs refurbishing. You know, we had 30 years of war, and some hotels are still rather aged in their properties what they offer. So do you see more capital being available for refurbishing and to get the property into a stage where they can compete?
Clearly, we would like that as opposed to a green field, simply because the development risk is taken away from you. Generally, what we find most difficult for Sri Lankan banks to really analyze, and our project finance department struggle that much more in order to ascertain the completion risk. And once that is taken away, and if you're talking of refurbishment, if you're talking of expansion, you're also talking of about a 5-year plus situation, which means you have the entire history of how the company has fared over the last few years. So clearly, a very attractive area in the tourism industries for commercial banks with shorter tenor funds to fund short tenor expansions of 3 to 5 years, whether it's refurbishment or adding a few more rooms in order to increase capacity, are clearly very favorable areas for us.
Sharini, like another question from your perspective of why is Sri Lanka not being able to attract funding from the pension industry, insurance industry to the hotel sector? Is there still a level of uncomfortable situation where they don't want to invest and they always invest in the government securities and not take this sector as a favorable sector?
Well, I think it's a question of two things. One, as you said, there is when these international pension funds evaluate an opportunity, the first thing they look at is, of course, country risk. And so as a country, we have seen limited engagement by large institutional investors, but a growing engagement. So one, of course, yes, is the country risk, but I think more kind of interestingly also is the question of what kind of investment opportunities are available for them. A large pension fund, an insurance fund, if they are to invest in real estate, they're looking at generating yield, they're looking at strong, stable cap rates, and there are very few assets of that nature that are on the market at the moment. So I think it is actually a huge opportunity for developers. Because we have a shortage of these kinds of yield-bearing assets. It's an opportunity for developers to create those assets, anticipating exit to these kinds of institutional yield-based investors.
Particularly long-term, because they are looking for long-term investments.
Exactly, and that's why hotels are very attractive projects, because once a hotel is operational, steady cash flow, it is an attractive cash flow-based play for an insurance fund, for a pension fund.
What's wrong with products like REITs? I think in the budget also we talked about REITs as a one instrument which should be introduced to Sri Lanka, provided we can address the stamp duty and VAT and all kinds of taxes.
Yes.
But do you see that as a attractive proposition for hotels to do REITs?
Yes, I mean, personally, I am a big believer in REITs and the necessity of REITs for capital market development in Sri Lanka. I really think we need those kinds of yield-based instruments. So yes, in the large scale, I think we should work towards launching REITs. I think the current market is such that in order to launch a REIT, you need to have an asset that will generate that yield. And right now, if you look at the assets that are available in the leisure sector, they aren't yet generating the kinds of yields that are attractive to a REIT. I think that will change. I think right now we're seeing sort of this is the development stage in Sri Lanka, right? So you're seeing that premium to development. But as you have more stable operating assets, then at that point, I think you will see an attractive market for instruments like REITs.
Thank you. I'd like to open questions from the audience. I think there are some mics roaming around. Feel free to, yes, please. Wait for the mic. Yeah, 1 second. Yeah, I can hear you. So you can, there is a mic coming.
You spoke about refurbishment of hotels and whether the banks are, able to finance the refurbishment of hotels. You see, I've been in the industry for over 40 years, and I've been trying to work with some banks where trying to financing some of the equipments that the industry wants. You see, I have done a proposal and I've gone to so many banks, like, you see, you take a equipment, say the laundry, which is about 4 to 5 million rupees. So whether these type of equipments can be leased out over a period of time, like, if you buy a vehicle, you're giving a 5-year lease program. So is the same facility able to be given to these hotels to lease their product for over a period of time so that they would not, invest, their capital cash flow would not get affected in that way? Is there any possibility of going to certain...
Firstly, my apologies. I should get in touch with you, come and see you and see how we can do this business. I would somehow do this. But secondly, very, very doable and a good structure as well. Because what you don't want is, it's an existing asset which has worn down and you're replacing it. What you don't want is there was a cash flow that was coming in and that was going out. You don't want to suddenly increase it with a huge capital outlay. And the ideal product to look at is a term loan structure or a leasing structure over the cash flows that could be generated to repay the loan. I promise you this time I'm going to come and see you.
This is a question directed to Alan.
Yes, sir.
We are sitting next to a very dynamic industry, that's the India. Yet the number of people coming into Sri Lanka from India is very, very small percentage. Now, one of the way that we could lure is to accept their currency, as a means of exchange in any of the hotels or anywhere, the Indian currency, barring, of course, the two currencies that have been demonetized. But going forward, would your bank be able to do that? I raised this question with Ravi yesterday also, and he's going to raise it up with the, finance minister, right? But what is your perspective about, banks accepting Indian currency?
Basically, there's been a significant amount of lobbying by the tourism, the hospitality industry, as well as certain brands who want to basically attract the Indian tourists into Sri Lanka as opposed to letting them go to Singapore and Dubai to do their shopping as well. So this is high on the agenda in the Indo-Sri Lanka Trade Association at the Chamber of Commerce, which I represent. I am also part of that. This has been escalated to central bank. We need to manage the logistics of having huge amounts of Indian rupees and how does this arrangement works. But all I can respond at this stage is that it's very much something that is with the governor at the moment. Just slight digression is the amount of rupee coins that are in Indian Coorey's, which you need to actually ship them back, and the phenomenal cost that we actually incur in doing that. So this might be a nice way of taking the Indian rupees and actually going and doing your pujas.
Issue. Now, we have a very large trade deficit comparing to India. We import so much so that it is a huge amount. But the inflow of Indian currency that comes in, don't you think that would be a good mechanism to pay our bills?
It certainly would be, especially to settle the Indian imports and the Indian bills. For sure it can be used. So I think somebody needs to get down to the drawing boards, look at the trade flows that are taking place, and look at how much of it can be, let's say, looked at in order to get into it. So it's very, very doable. I think we need the professionals to do their work and come back with their recommendations. You asked me directly, would we be willing? The answer is most certainly yes, other than the recently banned currencies. But we would be, but we would fall within the central bank ambit of it.
So, thank you very much.
Could I have one more question?
One more question? Okay.
There's been a lot of reticence from what has been discussed in terms of bankers coming in more generously with their funding to the industry. Could it be that there is lack of consistency in policy that has made the bankers somewhat suspicious in giving their funds quite freely to the industry? That is question number one. Question number two, of course, all bankers are stingy people, They don't want to spend their money, but they're also looking for means of getting their money. But having said that, the tourism industry supposedly, or shall we say hypothetically, is going to grow, as that lady said. And based on this exponential growth, could it not be that the bankers will be just a little bit more generous in putting their money in to see that the industry moves up a tab or two?
Well, Jonathan, you have a few seconds. Time is up, but you can just...
Firstly, Steve, I completely disagree with you. We are not stingy people. Secondly, riding on that growth, whether it's exponential or otherwise, we are more than comfortable. I mean, bankers have put money where there's been no growth in order to just merely sustain the industry. So it's not fair to say that we just put money only into growth areas. We do not. We put money into high-risk areas like SME without financials, SME without equity, microfinance without collaterals. We put billions of rupees on a monthly basis into these industries. So putting money into the tourism industry is a no-brainer. It's something that we certainly do have an appetite for. Thanks very much.
So thank you very much, Pri, Sharini, and Jonathan, and Shahan. Excellent presentations. Thank you.
Thank you.